Hey everyone, welcome back to The Explainer. Today, we're zooming in on the massive, ultra-fast world of retail Forex trading, but we're looking at it through a very specific, highly structured lens, and that is Islamic finance. We're going to completely unpack the Halal Radar assessment of this global market. So if you're someone who loves digging into the deep mechanics of financial systems and seeing exactly how they intersect with ethical and religious frameworks, well, you are definitely in the right place.
You know, Forex looks pretty simple on the surface, right? You buy some dollars, you sell some euros, and fingers crossed, you make a profit. But for a lot of traders, especially Muslims who are trying to follow Islamic jurisprudence, the real question on the table isn't just, can I make a quick buck? The question is this practice halal or is it haram? Does the underlying machinery of retail Forex actually align with the strict principles of Islamic finance?
Okay, let's dive right into this, because the scale here is literally mind-blowing. Our source text highlights the staggering fact. In the Forex market, more money can move in a single day than the entire yearly economy of many countries. I mean, wow. It's a massive digital ocean of capital. But, and this is a big but, just because a market is huge and you can access it from your laptop, that doesn't automatically mean it operates on principles that are considered pure or permissible under Islamic law.
So here's our structural roadmap for today's audit. We're going to cover 1. The retail Forex illusion. 2. SERF, which are the rules of exchange. 3. The danger of leverage. 4. Hidden fees and swaps. 5. Gharar and Maysir explained. And finally, 6. The final verdict. All right, let's kick things off with part 1, the retail Forex illusion. We really need to look past the marketing labels here.
It's super fascinating to see how retail Forex is packaged and pitched to the Muslim demographic right now. You'll constantly see brokers aggressively advertising these Islamic accounts or promising swap-free trading. It's literally marketed as halal Forex. The front label basically screams at you, no interest, no problem. But according to our source material, a front label just doesn't cut it. True Islamic compliance means we've got to look straight under the hood. We absolutely must investigate the actual contract, the settlement mechanisms, who truly holds ownership, and exactly how the risk is being distributed.
Moving on to part 2, SARF, or the rules of exchange. This is the Islamic jurisprudence of currency.
So, to really grasp this assessment, we've got to understand the baseline rules, right? In Islamic fiqh, sarf is the term for currency exchange. Now, the source makes it super clear that exchanging currency isn't automatically forbidden. It can absolutely be permissible, but it has some very, very strict requirements. It demands spot execution, real possession, clear ownership, and, this is crucial, absolutely zero interest-based delay. Both sides of the trade have to be delivered clearly and immediately.
Let's put this into perspective and compare two scenarios. First, picture a traditional spot exchange, like walking up to one of those little currency desks at the airport. You hand over your physical cash, you get different cash back right there on the spot. Bam! Immediate, clear possession. Now, contrast that with retail online Forex. According to the analysis, retail traders almost never take actual, physical possession of the currency. Instead, you're really just opening a synthetic position based on price movements on the broker's platform. And that lack of real cash possession? That's a massive compliance hurdle.
Which brings us to part 3, the danger of leverage. Basically, trading with borrowed money.
And this brilliantly illustrates the core issue. In the retail Forex world, you might deposit a mere $100 of your own cash into an account. But the platform? It lets you execute a trade worth $10,000, or sometimes way more. So where exactly does all that extra money come from? Well, it's effectively a loan or a margin facility given to you directly by the broker.
Now, you might be wondering, why on earth would a broker just hand you that kind of money? Even if they boldly claim their loan is interest-free, the whole structure still heavily benefits them. Brokers are making their money back through widened spreads, forced trading conditions, hidden commissions, or restricted rules that are tied right back to that margin facility. And the source material points out something vital here. In Islamic finance, whenever a loan brings a benefit to the lender, scholars treat it as a very serious Riba concern.
Okay, part 4, hidden fees and swaps. This is the whole overnight interest problem.
Let's talk about Riba. It means usury or interest, and the source stresses that this is considered one of the major sins in Islam. So we're not just talking about some minor technicality. Here's how it plays out. In standard retail Forex accounts, if you leave a trade open overnight, the broker might charge or even pay you a swap fee. That fee is intrinsically tied to the interest rate differences between the two currencies you're trading.
So for an Islamic trader, that overnight swap is just a glaring red flag that structurally violates the prohibition of riba.
Part 5. Gharar and Maysir explained, or speculation versus real trade.
Let's unpack a couple of Arabic terms that are completely central to the source's argument. First is Gharar, which refers to excessive uncertainty. The second is Maysir, which translates to gambling-like speculation. In the retail Forex environment, the entire focus is usually incredibly short-term. People are hyper-focused on quick entries, quick exits, managing insanely high emotional risk, and essentially betting on microscopic chart movements rather than actually engaging in tangible commerce.
So the really crucial point here is this. Retail Forex usually lacks any real-world need. These traders aren't exchanging currency because they're taking a vacation overseas, and they certainly aren't hedging for a legitimate import business. They're betting on a chart. They're relying on high leverage and soaking up extreme emotional risk. And the assessment concludes that this total lack of actual utility pushes modern retail Forex far away from real trade and dangerously close to prohibited gambling.
Finally, Part 6, the final verdict. Let's look at Halal Radar's official ruling and what actionable steps you can take. All right, so after peeling back all those layers, looking at the marketing labels, the spot exchange rules, the massive leverage, those sneaky overnight fees, and the speculative intent, we finally arrive at the source's definitive, impartial conclusion. The Halal Radar verdict states clearly, avoid normal retail Forex currency trading. Let's do a quick recap on exactly how they got to that conclusion. If we look at Shariah principles versus the retail Forex reality, it's pretty eye-opening. First, the trade has to be free of riba, but Forex commonly involves swaps and broker financing. Second, real possession is an absolute requirement, but retail platforms completely lack actual physical ownership or settlement. Third, no unjust loans, yet the whole system relies heavily on huge leverage. And finally, the trade must be free of gambling, but the reality is that the environment is plagued by Gharar and Maysir, that excessive uncertainty and speculation we just talked about.
Now, if you're already trading or maybe thinking about getting into it, Halal Radar actually lays out 4 super practical steps for you. Step 1, immediately stop using any account that features swaps, interest, or leverage. Step 2, don't just blindly trust the label Islamic account. Demand a real Shariah audit from qualified scholars that proves actual ownership. Step 3, if you genuinely need to exchange currency for travel or business, just stick to simple spot exchanges. And Step 4, protect your wealth from platforms that sell these big dreams of quick money while bearing religiously dangerous contracts deep in the fine print.
The source wraps all of this up with an incredibly powerful quote about the spiritual weight behind these financial decisions. Halal income may grow slowly, but it carries barakah. Haram or doubtful income may look fast, but it can remove peace from the heart, the home, and the risk. I think that just serves as a beautiful reminder of their framework, that the speed of your profit is way less important than the purity and the transparency of the process you use to get it. Which brings us to a final question for you to chew on today. The next time you see a super slick, modern financial ad pop up on your feed, will you look past the front labels and rigorously examine the actual contract underneath? Applying this kind of structured, critical framework is just absolutely essential to protecting both your wealth and your principles. Thank you so much for joining me for this explainer. Keep asking those hard questions, and we'll see you next time.